Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday, and Apple and Google have declining momentum. My first blip reviews the weekly and daily charts for the NASDAQ and SOX. The weekly chart for the NASDAQ shows that the 200-week simple moving average is now strong resistance at 2303. The daily chart for the NASDAQ shows a trading range between 2150 and 2550 with a weekly pivot at 2272. Monthly support lags at 1190. The Philadelphia Semiconductor Index SOX is well below its 200-week simple moving average at 447.14. The daily chart shows the March low at 332.11 and the 50-day, 200-day simple moving averages as resistances at 286.60 and 392.50. My second blip looks at the weekly and daily charts for Apple and Google. The weekly chart shows a downtrend for Apple connecting the highs of December and May. The daily chart for Apple had the share price just above its 200-day simple moving average at 164.82 as earnings were announced. Failure to hold, 164.82 after earnings indicates risk to my monthly value level at 139.33. The weekly chart for Google now shows a potential for a trend towards the 200-week simple moving average at 411.17. The daily chart shows the March low at 412.11 and chart gaps at 459.73 and 485.44. My third blip looks at Texas Instruments, which missed earnings expectations after the close on Monday. TI is rated a strong buy according to automated stock alerts, and the stock traded down to my monthly value level at 25.01. This is below all levels shown on the daily chart. My monthly value level is 25.01, which is the level I will use to return the stock to Richard Suttmeyer's Sector Report model portfolio. The monthly pivot is 27.93, and semi-annual resistance or risky level is 29.88. Texas Instruments has been a successful buy and trade stock for the model portfolio 6 times since October 2006. It last exited the portfolio at 29.04 last week on July 17. My fourth blip looks at the weekly and daily charts for the Dow Industrial Average. The Dow has stayed below its 200-week simple moving average at 11,700, which is the upside by Labor Day, as long as weakness holds my annual support at 10,747. The daily chart for the Dow clearly shows that the oversold condition that persisted since June 4th has been alleviated. Weekly support is 11,013 with a daily pivot at 11,400. The 11,400 pivot will be resistance given the disappointing earnings from American Express after the close on Monday. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.